Tax revenue did fall slightly in the year ending March 2024 compared to the 12 months prior, to just under £411 million, although figures do suggest the re-establishment of pre-pandemic levels. The recovery was helped by measures including a 2.5% rise in corporation tax and a temporary increase to income tax rates. In introducing the departmental audit of the Income Tax Office, Tony Sacramento says the ITO has not reconciled its records of revenue collected with those of the Treasury, the government's main accounts book, in over 6 years. Nor has the ITO provided the Treasury with necessary adjustments to its accounting system in this time, and as such, the Principal Auditor says that he was unable to provide reasonable assurance on the accuracy of tax revenue receipts after March 2019. From a more than 10-year low in 2019, revenue arrears of income tax, corporation tax and employers' PAYE deductions have also grown significantly. As of March last year, these stood at £26.6 million, an average annual increase of nearly 10% since 2019, outpacing revenue growth over the same period. A trend emerges in employers withholding PAYE deductions instead of passing them on to the Income Tax Office. In 2019, companies owed £4.87 million in PAYE. By 2024, this figure had almost doubled to £9.58 million. Overall, companies owe nearly £25 million in arrears, with the 10 worst offenders responsible for £6.36 million between them. Meanwhile, PAYE individuals collectively owe £7.26 million, with 34 people, or just 0.6% of debtors, owing more than 28% of the total arrears. The auditor notes that more repayment agreements have been introduced, which should result in the recovery of just over £1 million. However, a review last October revealed that only 43% were complying with their repayment terms. 38 high net worth and Category 2 individuals with active taxpayer accounts owe over £1.4 million in taxes. Together with debts from another 22 inactive accounts, total arrears sat at over £1.7 million last March. The Principal Auditor laments the abandonment of a name and shame policy, which he describes as an effective deterrent. Although it previously yielded positive results, the Central Arrears Unit no longer supports its use and no list has been published since February 2017. Social insurance contributions have been growing at nearly 6% a year since 2019, reaching over £125 million last year. But arrears have also climbed sharply, totaling nearly £11 million in March 2024, a 78% increase. Of particular concern is the practice among large companies, especially in the financial services and gaming sectors, of using tax losses to eliminate profits and avoid paying tax in the current year. The Commissioner of Income Tax warns that this poses a significant threat to public revenue. To address this, the government plans to introduce limits on the amount of losses companies can carry forward, ensuring that at least some tax is paid on current year profits.